SpaceX went public on Friday, and for the first time in the story, Tesla is now the smaller of Elon Musk's two big companies. SpaceX closed its first day worth more than $2 trillion. Musk's net worth crossed $1 trillion, and a question that used to be hypothetical, whether Tesla and SpaceX merge, is suddenly live. We've also got Tesla quietly telling regulators its robotaxi is a fully self-driving system, a new SpaceX AI business already bigger than Starlink. And the biggest event for the stock this month, the new Fed chair's first meeting on Wednesday. This is the Tesla Brief, the week ahead, Sunday, June 14th. Welcome to the show. Tesla finished Friday just over $406, up about 3.9% on the week, well ahead of both the Nasdaq and the S&P 500, which each rose under 1%. A clearly company-driven week for the stock. Let's start with the week that just finished. The story of the week, really the story of the year so far, is that SpaceX went public on Friday. Here are the numbers. SpaceX priced its shares at $135, and they closed the first day at $161, up more than 19%. That values the company above $2 trillion and raised as much as $75 billion, which makes it the largest stock market debut in history. Musk owns roughly 42%, so his net worth crossed $1 trillion on Friday. The reaction split along familiar lines. Dan Ives at Wedbush called it an important moment for the AI build-out. Michael Field at Morningstar was more cautious, warning that with so many unknown and untested technologies underpinning much of the valuation price, particularly within the AI business, the valuation is extremely speculative. Here's why this matters for Tesla holders, and it's bigger than it looks. For the first time, there's a public price tag on SpaceX. That does three things at once. It gives the market something to compare Musk's other big bets against. It turns SpaceX into a possible merger partner with a real traded value. And it hands Musk a publicly listed company he can use to raise money. For the whole history of Tesla, Tesla has been the big Musk-company. As of Friday, it's the smaller one, and that flipped a question from theoretical to live. Do Tesla and SpaceX merge? SpaceX President Gwynne Shotwell hinted at exactly that in a CNBC interview during the IPO week, the second such hint from a SpaceX executive recently, and Wedbush has now put odds on the combination. Over the weekend, the Tesla shareholder community split openly over it, and the split is worth understanding, because it's not really about price. One camp, anchored by a widely followed shareholder named Brad Ferguson, argues that merging anywhere near a $600 a share level would mean selling Tesla cheap, right before Robotaxi and Optimus pay off. They point to the math in Musk's pay package, which implies something closer to $2,400 a share if Tesla hits every target. One longtime holder put it bluntly, "You didn't ride Tesla from $400 down to $100 a share in 2022, and eat all the abuse that came with it. Not, the argument goes, just to hand it away on the eve of Robotaxi and the dawn of Optimus." The other camp argues the opposite. They say Tesla is going to need to raise a lot of money to fund its AI and chip build-out no matter what. And every time it does, each existing share ends up owning a slightly smaller piece of the company. So the real question isn't whether that happens, it's how. A merger funded through SpaceX's cash is, in their view, a better deal than a straight Tesla share sale, which the board can do on its own without a shareholder vote. And that's the insight worth holding on to. The loud fight over $600 versus $2,400 a share looks like an argument about price. It isn't. Underneath, it's an argument about who controls Tesla's next big capital raise, the board or the shareholders. And importantly, there is no actual proposal on the table. Shotwell hinted, Wedbush handicapped it, and the most engaged retail holders are already debating terms for a deal that doesn't exist on paper. The signal there isn't who's right. It's that Tesla's most committed owners have moved ahead of the company, and that changes how they'll react to the next word from Tesla or from Musk on the subject. One more data point on the same theme. Cathie Wood's ARK, one of the most committed Tesla bulls on Wall Street, bought 3.3 million SpaceX shares on the IPO day itself. ARK is also a big Tesla holder, so how it splits its money between the two is a real money read on how even Tesla's strongest backers are now balancing the two Musk companies, with both of them public. The second big development of the week was quieter, but it matters. A Tesla safety document surfaced over the weekend, the Robotaxi First Responder Interaction Plan. And in it, Tesla formally describes its Robotaxi service as SAE Level 4 autonomous driving. Let me explain why that wording is a big deal. There's an industry scale for self-driving, 0 to 5. The supervised full self-driving that Tesla sells to customers today is Level 2. The car does a lot, but a human has to stay ready to take over at any moment. Level 4 is a different thing entirely. The car drives itself fully, with nobody needed behind the wheel, inside a defined area. Tesla has historically avoided that label. Now it's using it, in writing, to regulators. The same Level 4 designation also showed up in a Tesla permit filing in Nevada for up to 5,000 vehicles in Clark County. And the same document lays out an Arizona expansion, Phoenix, Tucson, and the surrounding metros, pushing straight into Waymo's home turf. But here's the context that keeps it honest. The actual robotaxi fleet on the road today is still tiny, around 20 vehicles, all in Texas. And the meaningful ramp is still expected late this year or early next, once the next big rewrite of the self-driving software is ready. So Tesla is filing Level 4 claims and 5,000 vehicle permits, while its real fleet is smaller than a single Waymo city. The paperwork is running well ahead of the deployment. That's not a criticism, it's how you get permission to scale. But it does mean the public record now commits Tesla to a specific, defendable autonomy claim. And it sharpens what to watch next. The gating items are that software rewrite and the ability to actually manufacture the fleet at volume. On the same theme, Tesla's supervised full self-driving was approved in Belgium over the weekend, the fifth European country to sign off, after the Netherlands, Lithuania, Estonia, and Denmark. Tesla still has to pass local testing there before customers can use it. Third, and tying back to the merger question, reports over the weekend suggest SpaceX has quietly built an AI cloud computing business. It launched around mid-May, and within a month, it's reported to have signed Anthropic and Google to contracts worth a couple of $1 billion a month. That's a pace of sales already estimated to be larger than all of Starlink's annual revenue. Treat the exact figures as early and unconfirmed, but the direction is the point. Why does that matter to a Tesla holder? Because a week ago, Tesla's AI story was its own. Its Dojo and AI-5 chips, its self-driving compute. Now there's a second Musk-controlled company doing multi-billion-dollar AI infrastructure deals with the same giants Tesla is competing against for chips and computing power. If the two companies merge, Tesla holders get a piece of that. If they don't, Tesla holders watch Musk build it inside the other company. Either way, the AI part of the Tesla story now has Musk-owned competition sitting right next to it. And one more from the week, on the competitive front, and it's a friendlier read for Tesla than the headline suggested. Rivian's R2, the mass-market SUV it pitched back in 2024 at $45,000, is launching at $58,000 to $60,000 and up. The $45,000 base version is now pushed to spring of 2027. Rivian has burned through more than $24 billion in cash, lost the federal tax credit that made the original price work, and ranked last in Consumer Reports' brand reliability survey. So the most-watched Western rival to Tesla's mid-priced cars is arriving weaker and pricier than it promised. The competitive pressure there looks lighter than it did a quarter ago. The real pressure on Tesla is coming from BYD and the sheer speed of EV adoption in China, not from a cheaper Western competitor. So that's the week behind us. Here's what's on the calendar in the week ahead, and one event towers over the rest. The single biggest event for Tesla stock this month lands Wednesday at 2 p.m. Eastern, the Federal Reserve's interest rate decision, plus its updated projections. And crucially, the first such meeting led by the new Fed Chair, Kevin Warsh. Here's the setup. Inflation came in hot this week. Headline consumer prices jumped to 4.2% over the past year, up from 3.8%, with core inflation at 2.9%, driven by a sharp jump in energy prices. That's the opposite of what the market wanted heading into a new chairman's debut. Ed Yardeni, one of the most closely read economists on Wall Street, published a note over the weekend describing Wednesday as a historic pivot from easing to tightening bias, as he put it, with inflation risks now outweighing unemployment concerns. He expects the Fed to signal that rates stay higher for longer. And here's why that matters more for Tesla than for most stocks. A big chunk of Tesla's value sits in profits that arrive years from now: Robotaxi, Optimus, AI compute. When the Fed signals higher for longer rates, those far-off profits are worth less today, and Tesla tends to fall harder than the broad market. So Wednesday isn't just a macro event Tesla rides along with. It's the biggest single swing factor for the stock between now and Q2 earnings in late July. The key question is simple. Does Warsh confirm Yardeni's tightening call, or does he come in more dovish than the hot inflation prid suggests? If he leans hawkish, it's about the worst macro backdrop Tesla could ask for going into earnings. If he surprises by favoring lower interest rates, the relief for the stock could be real. Either way, expect the reaction to set the tone into July, as much as the decision itself. Before that, on Monday, we get China's weekly car insurance registration data, the cleanest near real-time read on Tesla's demand in its second biggest market. With Tesla's Q2 delivery number due in just over 2 weeks, the question is whether China's weekly pace is holding above its May trend, or starting to roll over in the middle of the quarter. Around midweek, we should also get Tesla's May registration figures for Europe. Europe was soft through the first quarter, so the question there is whether May shows volume stabilizing or another year-over-year decline. Thursday brings a quarterly expiry of stock options and futures, moved up a day because markets are closed Friday for the Juneteenth holiday. That kind of expiry can amplify or dampen whatever the market's price movement is already doing. Landing it the day after the Fed could make Thursday's moves a little exaggerated in either direction. And with Friday closed, there'll be no daily episode that day. 2 slower-burning things to keep half an eye on. First, Robotaxi. With the Level 4 paperwork and that Arizona expansion plan now on file, the next real data point would be an actual launch announcement outside Texas, Nevada, or Arizona. The question is when it lands, and how many cars it starts with. Second, the merger talk. So far it's been entirely one-sided, hints from SpaceX, odds from Wedbush, debate among shareholders. The thing to watch is whether Tesla itself or Musk directly addresses it in the next month, or lets the speculation keep running on its own. And looking a little further out, on June 25th, we get the Fed's preferred inflation gauge alongside GDP, the first major data after Wednesday's meeting, and a check on whether this week's inflation jump was real or noise. Then around the 1st of July, the big one, Tesla's second quarter delivery and production numbers, the next major data point that will tell the real story. The most important Tesla data point before earnings, landing the same window as BYD's June figures for a direct head-to-head, and Q2 earnings themselves come in late July. So here's how to hold the week ahead. The near-term answer comes Wednesday, and it's largely out of Tesla's hands. Whether the new Fed chair confirms a turn toward higher for longer rates or eases the market's nerves, that sets the mood for the stock into summer. But the bigger question is the one this week actually opened. Now that SpaceX is public and worth more than Tesla, and now that a merger has gone from idea to live debate, who decides what happens to Tesla next, and on whose terms? There's no proposal on the table yet, but Tesla's most committed owners are already pricing one in their heads, and that usually tells you where the next big story is going to come from. That's the Tesla brief for today. If it's been useful, please subscribe. Thanks for joining us, and we'll see you in the next episode.